Goldman Sachs releasing a new report about its top 25 tactical trades for earnings season. The note stating that 2024 is going to be known as the year of the stock picker. We have one of the authors behind that report joining us right now, John Marshall, head of derivatives research. John, it's good to see you. Maybe just start actually big picture question I have for you, John, because I know you're tracking options, options positioning. As we head into kind of the thick now of earnings season, John, I was just curious if you've noticed, have there been any kind of big changes, new changes, John, that you would call out in terms of just trends and themes?
Yeah, thank you very much for having me. I'd say there's two really big themes that are happening right now. The first is extremely low correlation between stocks. Correlation, people talk about the Mag 7 and how much they've dislocated from the other 493 stocks in the S&P 500. But when you look at all 500 and you calculate the correlation, it's been only 1/3 the level of normal. And this is near an all-time low. And options markets are telling us that we're going to remain in this low correlation environment for the rest of the year. What the disparity that's causing is we've got a VIX that's at 12, which is at an extremely low level, and we've got earnings day moves for single stocks of 4.8%, which is at a 14-year high. So it's a very uncorrelated market that we're in, and that's why we're so focused on picking stocks.
Because the bottom line is it really pays off to be right in this market when you're surrounding earnings. So what you guys went and did, you looked at your most out of consensus calls from your big team there of sell-side analysts, and you picked some interesting ones. Chipotle's on your list, Starbucks, Enphase Energy on the list, Bank of New York Mellon, which reported today, Affirm. So it's a pretty diverse list here. Microsoft's on the list as well. How do you go about figuring out which are the most out of consensus calls, and then what's the best way for people to play these guys?
Yeah, it's a great question, and it's something that we've honed for years. We've published this list in exactly the same format for the last 12 years, each quarter, talking with our analysts, analyzing their estimates relative to consensus. And what we found with all of our studies is that analysts have a powerful amount of information in their estimates. And when our analysts are significantly above consensus or out of consensus, the stocks tend to rise on average. And when they're below consensus, they tend to fall. And so we're very focused on that sort of trend as we are doing this analysis. We start out with 1,000 stocks under coverage. We whittle it down with quantitative methods to get it down to about 500. And then even further to get to this list of 25 by speaking with our analysts and understanding the drivers behind their views.
As we were just showing there, John, I mean, that's a lot of different names, sectors, industries. Any kind of broader underlining threads that are connecting these?
It's a great question. Our approach is very idiosyncratic. We're looking for where analysts identify things that are special about the stock that are going to drive an unexpected move in earnings. However, I would say underlying many of the calls is this tug of war between prices and inflation. Inflation has driven up expenses for many companies, and prices are just now starting to come up. Allstate is a great example. The cost of repairing a vehicle or replacing property that people have insured has been rising, and they're just now able to catch up on the rates that they're able to charge their customers for auto and home throughout the country. And that is what our analyst is picking up as an idiosyncratic opportunity. We're seeing similar things for Chipotle and for Starbucks, where we think that the growth can return.
John, there's also another measure that you guys have been watching that I want to dig into a little bit. This one's a little wonky, so I'm going to ask our viewers patience for a moment. You guys are looking at single stock options as a measure of positioning. That is here, I believe, in the purple line. The blue line as well is a high retail sentiment basket. So where are retail traders excited about right now? That's what that line shows. And basically what we're seeing now is that the retail sentiment has diverged. It's higher than those single stock activity. So what is this telling us looking at this chart, and how can people use it going into this earnings season?
It's a great question. And this is the number one chart that we focus on as we approach earnings season. single stock options have become a very valuable indicator because they tell you about the enthusiasm level of retail and hedge funds. So most single stocks are, when people trade single stock options, they're buying 1 to 2 week call options. And so the volume in single stock options is really telling you about this enthusiasm level. And when that enthusiasm level wanes, the stocks don't drop immediately, but the stocks see pressure after that. We saw this heading into last earnings season from March 8th to early in April. We saw a decline in these option volumes. And then sure enough, in the first week of earnings, we saw a pullback of about 4% in the S&P. Now, it's not our call that the S&P is necessarily going to decline here, but weak stocks, stocks with weak fundamentals, stocks that have high leverage, we think hedge funds are going to be more emboldened to short those stocks as we're entering earnings season because there's less of that threat of a short squeeze from retail in the options market.
And John, you mentioned you all have published your support for a long time, years now, John. So I'm just curious, what's its track record in terms of just performance?
Yeah, so we tend to look at this just as a gut check relative to the S&P, and a couple percent above the S&P annualized is what we've been running at. That's just how the math works based on our published ideas.
All right, thanks so much, John Marshall. Good to see you. Really interesting stuff for people to chew on going into earnings. Appreciate it.